Okay, welcome, guys. Today we are finally diving into Coffee Cafe. So, welcome to Coffee Cafe. Now, for this entire class project, we are taking everything that we learned from chapters 1 all the way to 12, and we're applying it into this concept. Well, we're also going to include chapter 13. That's going to be towards the end of the Coffee Cafe. Because remember, from the very beginning of the very class, on the very first week, I've mentioned this and I've mentioned this before. Our goal at the end of this class is to teach you all the steps to the accounting cycle. So we're going to go from step 1 to which is collecting our source document all the way down to completing and closing out our books and completing the post-closing trial balance. So for right now, the next 4 weeks we're going to be hammering down and only concentrating on the first 5 things. Okay, we're going to be taking a look at source documents, analyzing the data, journalizing, posting it to the ledger, and doing it on the trial balance. So for right now, the first 4 weeks, we're just going to go ahead and repeat and rinse and practice the idea of doing the first 5 steps of the accounting cycle. Once we reach the very end of our case, that's when I'm going to introduce you to the remaining 6, 7, 8, 9, and 10 steps of the accounting cycle. So with that being said, let's go ahead and take a look at our scenario. First things first is that there's a few things that we need to make because right now we haven't built our company yet. We are building the company from square one. Okay, and this is just taking an aspect or taking a look at how a company is being built from scratch and how you get it from point zero to point A, or I mean, sorry, to point, you know what I mean. So let's go ahead and get started. So here we have a $30,000 investment. Okay, and then on May 31st, okay, a business went bankrupt, okay, some local business, and we decided to go ahead and put an offer on that business. So now, here's the thing that we decided to do. Since the offer was approved and the bank approved us for this business, okay, we also have a $30,000 investment. This is our own money. This is our money. Okay? So this $30,000 investment is our own money, and we decided to make a purchase. We purchased furniture for $4,000. We also purchased a coffee brewer for $1,900, and we also bought the business name. So what we're essentially doing here is this local business that went bankrupt was already a pre-existing coffee shop. So now we're buying it out from under because it went bankrupt, and now we're going to buy it and continue its business selling coffee. However, we need to make a few changes, okay? So here's the first purchase that I bought. All right? What can I do with this first purchase? All right? Let's analyze this information, since the source document is pretty much that we made a purchase. So let's analyze this information. We made a purchase of the business, and we made a purchase of assets. Okay? So let's review our transaction analysis. Can we, or should we, journalize this? Okay? So let's go over transaction analysis. Is this enough information for us to journalize? Does it affect our business in any way?
Yes.
Yes, it does. Okay? And we have our chart of accounts. So let's look at our chart of accounts. Do we actually have accounts that I can place these items under?
Yes.
Yes.
No.
Who said no? I have furniture right here. Okay, and then the coffee brewer. coffee brewer is right here. Coffee brewer. Oh, nope, nope, nope. That's the copier. Coffee brewer. And the business name. The business name is going to be known as Goodwill. All right. This is a little advanced accounting, but when you buy a business either under or that's short of the actual selling price, it becomes Goodwill. So that is advanced level of accounting. So I don't expect you to know that, but I'm telling you that buying the business name is going to be considered Goodwill. All right. So do we have Goodwill in our books? Yes, we do. Now let's determine, can we make this, can we journalize this?
Yes.
Okay, let me ask you again. Why can we journalize this?
There's a source on it.
Okay, good. But I'm going to ask you a question. What's the very first assumption that we have here? What is the very first assumption for GAAP? What is the very first assumption under the rules of GAAP?
The economic entity assumption?
Yes. Now, can you tell me can you tell me what the definition of that is?
I think it's going concern.
It is not going concern.
We need to keep our business and our personal expenses and income separately.
Correct. So, in this case, this $30,000 is my personal investment. Do I have a business bank account right now? If you check your calendar real quick, when do I actually go to the bank and actually open up a bank account?
Fourth?
The 4th. So technically right now, can I journalize this transaction?
No.
No, because right now I don't even have a business bank account. So therefore, I can't start my business because I have that one assumption that I have to keep my business and my personal completely separate. And right now, this is my personal investment of $30,000. I made a purchase right now. So right now, these are officially all of mine until I establish a business bank account, and then I can go ahead and record these transactions. Okay? Second thing of all is, do I have a business license? Am I legal enough to even be able to run a business?
No.
You don't even have a business to begin with, right? You need to get a piece of paper or a business license that gets permission from both the state and the local agency to give you permission to even become a business. So let's see what happened next. Oh, what do you know? On June 3rd, we apply for a business license, okay? Or a fictitious name in this case. So we had to pay some court costs. Okay? So
Do you
here,
become a business when you apply for it, or do you have to wait for the application process? Like, do you actually get the DBA from the state?
yeah, honestly, getting a DBA right now, it's pretty easy. You will just apply, and within 30 days, you should be able to get it. But in this case, it's a fake business. So right now, we went to the bank and we pitched them on the idea that I want to become a business owner, right? So they're gonna kind of help us say, okay, well, first, okay, if you're gonna acquire this business, now your next step is you need to get your business license. All right. So usually that would usually happen. They wouldn't say, "Oh, you can't acquire a business until you have a business license." No, they'll let you buy the stuff first, and then they'll tell you what the next steps are to do.
Right, but from the accounting perspective, when does it actually count, I guess.
Whenever you receive it. Okay, so the day that you apply, right, doesn't mean you're gonna get approved.
Right.
Okay, because when you apply for a business license, they have to go through all your personal information, making sure that your credit score is good, making sure that you don't owe too much money, and there's a lot of rules and regulations that have to go when you apply for a business license. Most cases, if you are applying for obviously a small business, they'll approve it with the addition of getting approval of a bank loan or a business loan. But in this case, I have $30,000, and I'm telling the bank right now, I have enough to invest and start up a company. So with that being said, they're more likely to approve you a lot quicker versus someone who needs to borrow money. Okay. Now, of course, $30,000 isn't that much, but again, this is a fictitious business. We're not looking at logistics. So $30,000. If a bank can see that, and when you go through the approval process, when you apply for the DBA or apply for the state and county, they're more likely to approve you because you have the money. Okay, so in this case, I bought the business stuff, and they told me, hey, go apply for a business license and go apply for whatever it is. Now, in this case, I did this first. I went to the court to change the name because right now, I don't know, it's probably another name that I don't want it to be. Because in order for you to apply for a business license, you need to have the proper legal name for it. So in this case, I need to take the step to change the name first because I bought out the business name. Okay, I bought it under Goodwill. So in this case, right here, I applied for a DBA to change the name of the company, and it cost me $25 to apply for that form. All right, and then same day, or I'm sorry, the next day, that's when I decided to apply for the Nevada State Business License, which cost me a total of $250. And I also applied for the city business license. So remember, not only do you have to apply for the state, you have to also apply for the city that you belong to. Because the city that you belong to is going to encounter with all the city regulations, tells you all the local taxes that you have to pay. It also tells you what the county tax is. It gives you a lot of information, so you need to apply for the actual location. So let's say I bought my store in Summerlin. That means I may be subject to local and county and etc. Taxes. But at least the one thing I know for sure is that I have to get permission from the city to allow me to conduct business. Okay, now since this company was a pre-existing coffee business, they're probably most likely going to say, okay, since you're just carrying the name along, you're trying to do the same type of business, right? It's in a location where it isn't crowded or isn't by a freeway, etc., etc. Then they're more likely to approve you for that. So in this case, I applied for a DBA to change my name to Coffee Cafe. And then now I went ahead and the next day I applied for a business license using the legal name of Coffee Cafe. All right. And I had to apply for the state and the local city that my store location is located on. So in this case, I had to pay two fees. I had to pay $250 to the state license, and I had to pay $100 to the local city agency. All right. Any questions so far? Okay. All right. So now that I acquired the business location and its assets, I changed my name and I applied for both the business license and the business from the state and the county. Now, the question is, when can you actually officially start doing business? Right now, I'm just building my business. Okay? I won't start until the 17th of June, as I recall right here, because right now I just applied for just the business license. It can take anywhere from, from 7 to 30 days, right? It could take a whole month for you to get your business license, or if you check online nowadays, you can, if you get it approved a lot quicker, then you're able to see the application being approved online, and you're able to print out the temporary license until you receive your actual business license in the mail. Okay? So that means whenever I receive it, which in this case, I'm going to say I received in 2 weeks because everything was approved a lot quickly, right? I got approval that I can conduct business because I have $30,000. I already changed the name. I already applied for the business license, which they know I'm continuing on another coffee shop. So right there, I'm going to assume that I received, when I applied for my business license, I received it before the 15th of June. So I'm able to conduct my first sale as of the 16th of June. So there are a lot of rules and regulations. So when you officially get your business license, that's your day that you can actually start your business, as in like officially start your sales, okay? But in this case, I'm just preparing my store. I applied for the business license. Now I'm preparing on getting all the materials I need. I may have to renovate. I may have to make purchases of fixed assets. My store's not ready to open just yet. I'm going to take the first 2 weeks to go ahead and set up my business, acquire all the assets I need, do all the fixtures I need to do before I can go ahead and safely open my business. So right now, I can't do business because I don't have the license. I just only applied for it. But I can at least prepare for it. Okay? So in this case, I've done all those very initial steps. So now the next thing I have is I decided to open up a bank account. Okay, I decided to open a bank account at the National Bank. So here, I deposited all my money that I had left over, right? So because I made purchases of a fixed asset, I made purchase of furniture and a coffee brewer, and I made a purchase of the business name. I also made purchases of the business permit and license. All right. So here is a perfect example of how to journalize this transaction, right? At the end of the day, because I'm investing my own money, right? That means by equity right now, the value of my company should reflect my original investment. Okay? Now, I could have done this first. I could have created a bank account first. But there's also rules and guidelines that you should definitely apply for a business license first before you can open up a bank account. All right? Or first acquire the business so the business knows that you're trying to establish yourself. So there's a lot of rules and regulations on what should actually come first. You don't want to create a business bank account if you haven't applied for a business license yet, right? Because what if you didn't apply for your business license? What's the point of creating a business bank account if you don't have a business? Okay, so there may be a few rules and guidelines that you have to do first. And in this case, I decided to get everything I need first and then open up a bank account. Okay, so again, here is a perfect reflection of what I have. So as we talked about it, right, I have every single journal entry involved in here, right? Because when you, the first thing that you do when you're investing or when you're putting all your money in the bank account, you're essentially placing it into your checking account. We already discussed it. You have a furniture account, you have a coffee brewer account, and you have Goodwill. Now, the last one I have is, do I have a business and permit license? Right? So in this case, I put it as license and permit expense. So yes, you do have it. I'm letting you know right now. And we have owner's equity in here. So let's go ahead and attempt to journalize our first transaction. So let's go ahead and go to the journal. Okay? So what is today's date? Or what is the date that I opened my bank account, I guess? In this case, the scenario.
June 4th.
It is currently June 4th. Okay? It is June 4th right now. So the transaction happened as of June 4th. Right? I'm depositing a whole bunch of money in my bank account. So what is my first account going to be?
Cash.
Not cash. We're dumping our money into the bank account.
Checking.
It's going to be checking. So yes, I have it on there already, but I'm just double confirming and explaining why we have the necessary account. So I have a checking account. All right. Let's go ahead and tell me what number is my checking account, since I want to use account numbers. What account number is my checking account?
10100.
Good. It is 10100. All right. So that's going to be under your post reference, right? Is what account number are you going to be utilizing? So 10100. All right. And of course, I already did the calculations for you. But how much am I depositing into the bank? 21,625. Okay, if you want to, you may format this, but it should be more or less already formatted for you. Okay, what's the next item I'm actually going to be placing in here?
Furniture.
Furniture. Okay, so from the very beginning of this scenario, I made a purchase of furniture. I didn't care too much to actually discuss what this furniture is, just because what we're gonna do is we're gonna turn around and we're gonna actually sell off that furniture. Okay. So what account number is my furniture account?
13,000.
13,000. Good. So in my general journal, under post reference, is going to be 13,000. And how much did I actually made a purchase of that furniture for?
4,000.
$4,000. Right? What else is going to be the next thing I am acquiring?
Coffee brew.
We bought a coffee brewer. So let me go ahead and type that in. Coffee brewer. Okay. And what account number is my coffee brewer?
15010.
15010. 15010. Okay, so that might go ahead. Oh, Sandra, your microphone is on. And
Yeah,
we
but
can.
that's
That's not
that's
you?
not my back. Nope.
Oh, Talia. Okay, sorry about that. Um, okay, so let's go back to our scenario here. So here we are. Let me put you guys down. So here we are. So now what's the next thing that I'm going to be journalizing? Actually, since we know I left off here. So 15051. 15015. Too many numbers. Okay. How much did I purchase this coffee brewer for?
19.
1900. Okay. Okay. And then how much was my goodwill for? So again, the goodwill was the business name. Okay. So let me go ahead and look on my chart of accounts. What is my goodwill in here?
19100.
19100. Okay. And how much is my goodwill?
2100.
2100. Okay. last but not least, I went ahead and added all my Nevada license, my Nevada license, my city permit license, and I also threw in the business, what do you call it? The business name change. I threw it all into one category, which is the business and permit license and permit expense. So let's go ahead and take a look. Let's go ahead and look in our chart of accounts. Do we have a license and permit expense? Okay. Right.
6,600.
66. Let me see. 66. 66. I'm so sorry, guys. 6,600. Good. So let's go ahead and put it in here exactly how you see it in the chart of accounts. License and permit expense. Okay, license and permit expense for 6,600. And in what grand total is that amount?
375.
375. So it's 250 for the Nevada state. It is 100 for the city, and then additional $25 for the court costs. So in this case, that's a grand total of 375. Okay. And then lastly, right, a credit, because that's what equity is, right? We're increasing our equity. How do we increase our equity?
Credit.
You would credit the account. That's how you increase your equity. So, right, we're increasing the value. Right now, it's valued at 0, and we are increasing it to make the value stand as a total of $30,000. So let's go ahead and go to my chart of accounts. What is my owner's equity account? What number is that?
30,000.
30,000. Good. So 30,000. 1, 2, 3. All right. And if you are, okay, so this is the bare minimum of Excel that I want you to know. If you could do equal sum, right? Because we need to make sure that our debits match our credits. So if I do equal sum and I click on all 5 of these numbers, I should get $30,000. And if I do, great. If I don't, I must have typed something wrong in there. Okay? And then if you are old-fashioned, think about it. If you have $30,000 in your pocket, right? And you sat and you bought a $4,000 furniture, you bought a coffee brewer for $1,900, and you bought the business for $2,100, and you bought the licenses and everything for $375. Subtract that all out of $30,000. How much money do you have left? You should have $21,625 left. Okay. All right, now that is how we complete our very first journal. All right, all our debits are left aligned. My credit, my only one credit is indented. Okay, now I need to also place a piece of information here. What do I need to place? In this case, down below, you can copy that exact thing saying court costs $25. So I can go ahead, court cost 25, city, and NV was 125, 250. And I purchased a business for a total of $8,000. Okay. $8,000. Okay. So the business, so I bought the assets the two assets, and the business name to give a grand total of $8,000. Okay? And that should be a good enough information in regards to your description. Again, your description is whatever you want to put in there. If you don't feel like putting this in there, that's completely fine. But whoever looks at your books and then opens this up, are they going to know this information? And if they do, then they do. But if they don't, then they don't. Okay? So, I mean, your description could be whatever you'd like, whether it's enough for you to understand what the transaction is at hand. Okay? So that is our first transaction. Now, I'm going to show you this tactic because I think it's the best tactic that you can use when you're doing accounting. So, now that we finished our journal, right? Let's go ahead and update and post it to our ledger. Okay, so we're going to be moving on to our ledger now. So as you can see, all my ledger accounts are going to be in order of and categorized based on the account type. So each tab has an account type, and you can either search it by the number, search it by the name, whatever makes it easier for you to locate. For me, I like to scroll instead of having to do the Control F or the control, what did they teach you in Excel? Control, I think that you select the column and then you do Control F and then you type in something and it will locate it for you. In this case, there's not that many accounts, so scrolling is enough for me. However, you want to find the exact location of where to go, you may do so. So in this case, the first account that I see here is checking. So what do you know? It's going to be the second box. So if you actually notice your chart of accounts, right? Let's go back to your chart of accounts real quick. Notice this. Anything that's in capital letters is a main account. Anything that's in regular lowercase letters is going to be your sub account. Okay, you do, and then once you got it said right here, so a sub account, or it could be a contra account. Okay, so just a little FYI there on how this is organized. So in this case, my bank is my main account, but what falls underneath is going to be all of my my sub accounts. So I have checking that's consistent under my bank. I have which we will take a look at, petty cash. I have a cash register. So all of these things are going to be things that you're going to be considering as part of your bank account. So in this case, I am not updating my bank account. I'm updating every single particular account that is listed in my journal. So that's why you need to complete the journal first before you can complete your ledger. So that's the same thing in the accounting cycle, right? Once we finish step 3, which is journalizing, then the next step is to post it to the general ledger. Now, what I'm doing here is essentially I am building a balance. So at the end of the day, every time I write a check or something, right, I can know how much money I have at the end of the day. If I deposit money into the bank, I will increase my bank account. So at the end of the day, I know how much is in my bank account. So let's go ahead and try this real quick. So this is how I'm going to do it. After we've completed the journal, next is we're going to complete the ledger. So here I'm under my checking account. It should be the second table in the worksheet under assets. Okay. What was the date? It was June 4th. And in this case, I'm going to go ahead and write here that I opened the bank account. So open bank account. Okay, so here my notes here could be whatever you want to, so then you're able to know what that transaction is. Okay, so in this case I opened up my bank account. All right, and then the next question is, what's your post reference? This post reference is going to be where in the journal did you actually have this particular transaction happen. So if you notice this, if you look at your journal carefully, at the very, very top of the journal, it says General Journal, right? Coffee Cafe or Coffee Cafe General Journal, page number 1. All right? So in this case, my transaction happened on page number 1. So in this case, my post reference is that this transaction happened on my General Journal number 1. Okay? And did I debit my account or did I credit my account? In this case, I debited my account. So you're taking the information that you journalized in your journal and you're transferring it right over into your ledger. So in this case, right, I debited my account. So in this case, I'm also going to debit my account here for 21,625. So this one you do have to format. So in this case, I'm going to format it real quick into dollar format. Okay. Or I'm actually doing comma style. So I only want to see the decimals. I don't want to see the dollar signs. Okay. However you like it, you do whatever like you like it. Now, since this is the very, very beginning of your transaction, right? That means at your account balance should reflect exactly what you debited in here. Okay? If I have a debit balance right now, I entered it in as a debit. That means right now I currently have a positive debit balance in my bank account for the 21,625. Okay? When we move down into going further along, I'm going to show you how to do the formula. So then no matter every time you enter in a debit or credit, it's going to automatically calculate it for you. So for now, it should reflect as 21,625 in your bank account because it's the very, very first transaction that you've created. Okay? So right now I have a total debit balance, right? Because it's an asset. You should have a debit balance right now of $21,625. Okay? So same thing, you're going to go through every single one. So the next one is furniture. So I'm going to either locate my furniture. So again, you can use the account numbers if it helps you. I like to scroll. So here I am, furniture. Same thing. What is the date? The date is as of the 4th. Okay. And I'm going to go ahead and write that I purchased furniture. Pretty straightforward because you're entering it into the furniture, but I'm going to be specific and say I purchased furniture. All right. Post reference, again, this transaction is still on General Journal page number 1. And I did debit my account for $4,000. Okay. So therefore, my balance should be a positive $4,000 on the debit side. Okay. I'm going to format that real quick. All right. Is everyone good with me so far?
Yes.
Okay. So now we're going to go ahead and do the same thing for the coffee brewer, right? Anything that you've listed into your journal, you're gonna post it directly into your ledger. So the next one is my coffee brewer. So my coffee brewer is going to be under equipment. So here you go. Here is my coffee brewer. All right, coffee brewer. So I'm going to go ahead and put 6-4, and I'm actually going to indicate this is coffee brewer number 1. Okay. Coffee brewer number 1. All right. Post reference, again, we're still on the transactions on the first general journal. And I've increased my coffee brewer by 1,900. So therefore, my debit balance should be 1,900. Okay, so I'm just formatting my Excels. All right. Now that I've completed my coffee brewer, now I'm gonna go locate my goodwill. All of these I know for sure are assets, okay? Because again, I found them on the chart of accounts and they were all under assets. So therefore, I'm going to just keep scrolling down until I find it. Okay. So here's my goodwill. I'll keep going up. Prepaid accounts. Goodwill should be after deposits. There's my goodwill. All right. Same thing, 6-4. All right. And then I'm going to go ahead and write business name. All right. General journal number 1 because I'm still on my first page. And because it is for a total of $2,100, therefore my entire my debit balance should reflect as $2,100. Okay. Now my next one is going to be license and permit expense. Where would I be able to find that? Where would I be able to find this account?
Expenses.
Expenses, good. So I'm going to go ahead and scroll through my worksheet here until I find expenses. All right. Same thing here. All expenses are going to be in alphabetical order. So, yes. So L is going to be in the middle. Here's labor. There's license and permit expense. So here, I'm going to go ahead and indicate the date. Okay. So 6-4. And this is where I'm going to go ahead and indicate what I bought. So here is the Nevada license. Nevada, which was $250. City, which was $100. And then court cost of $25. Okay. Post reference, again, is going to be your general journal number 1. My debit here is $375. Okay. So here I've placed my description what this $375 entails. It entails my my Nevada license, my city license, and the court cost. All right. So I'm being very specific in every single thing I'm doing, right? I'm making specific notes in my ledger and more so or less on the general journal. This is good business practices because, again, if you are doing a bookkeeping for the first time, right? If you've done this for a long time now, right? And if you open your books just because you're auditing it, and you open your books and you don't see any description or any detail in it, are you going to remember what this transaction was? All right. When other people try to look at your books, right? Because when you're doing a business, your accountant, your tax accountant needs to look at your books. Are they going to know what this means? What $375 means? Okay. So again, it's definitely more, more beneficial if you are more descriptive. Okay. All right, so here's my $375 in my expenses tab under my license and permit expense. Okay. Lastly, I have owner's equity. Where can I find owner's equity?
Under equity.
Under equity. So again, I'm going to scroll through my little tabs here, and here it is, equity. All right, it should be the very first one. All right, owner's equity. All right, so 6-4, And I'm going to go ahead and write here original investment. Okay, that's my original investment. So general journal number 1, and it is a credit because you journalized in your credit. You need to reflect it as a credit as well. So in this case, it's a credit for $30,000, making your balance also a credit of $30,000. All right. So whatever you reflect in your journal is going to be reflected in your ledger. So if I debit in an account, you're going to debit it in your ledger. If I credit in an account, you're going to credit in your ledger. Okay. Make sure you are aware of that, because number one mistake that most accountants do is they look at the number, right? Right? And especially if you're only using one screen at a time. And if you're opening one page at a time, you have to memorize it, and you might place it in the wrong debit, or you might place it in the wrong credit. And that's the reason why we're going to run our trial balance at the end of the week, to see and to test if your debits match your credits. So if you make a mistake now, at the end of the week on the 7th day, we'll be able to catch that mistake and fix it right then and there, and then you'll be able to go ahead and move forth with the next scenario. Okay, so be very careful on which debit or which credit that you do assign this in. Again, it's supposed to reflect your journal, so if you journalized it as a credit, make sure you're careful and that you place it in the correct column. Okay, so that's just a lot of beginner bookkeepers, they make that mistake because they're flipping through so many pages, or they're bouncing from one book to another book. So in this case, my best way to help you eliminate that is to do something like a split screen. Now, in Excel, you should have been taught how to be able to view multiple windows at one time. I do not recommend that, just because you're going to shrink your screens up even further. But all I did was just minimize them, and I just sized them and just laid them out on my screen. Okay? Because it's going to be difficult if your screen is only 15 inches and you have 6 or 7 pages up, and you use the view multiple windows on Excel. It's going to be a lot more difficult to be able to look through which one is which and make sure that you enter, and you have to scroll through a lot of stuff. So my best recommendation is, if you can, try to make it like that you could see 2 things at once. At least that will help you a lot better than looking at one page at one time and having to memorize what you place on that page and having to transfer it properly. Okay, so that's what I'm doing here. I have my journal on the right side and my ledger on the left side, so I can see the correlations between the two. All right. So there you go. I finished my first transaction. I journalized, or I posted to the ledger my last piece of information, which was my owner's equity, right? So now I am completely done with my transaction. All right. So now I can go ahead and continue on with the scenario. All right. Everyone good so far?
Yes.
All right. Let's go ahead and continue on. So the next thing I see here is that I'm going to apply for a line of credit to the main bank account. What do I do with this transaction? Should I record this, or it's not significant enough to record?
So you just gonna apply.
Yeah, we're just applying, correct. So, can we journalize this?
No, because we don't have an amount.
Good job, Sandra. That is correct. First off, we're just applying. We didn't even get approved yet. Second of all is there is no amount. We don't even know how much we're getting approved yet. All we are simply doing is just applying. So in this case, this is going to be a non-posting transaction, right? You're not going to repost it. You're not going to care about it. You're just going to ignore it until you actually see a real transaction happen. Okay? All right. So here's the next scenario here. Okay? On the same day, so June 4th, okay, I decided to sell my furniture for $2,000 cash. Okay? Okay, and I also request a new ledger account to go ahead and to place this and record it. And we're going to place it in an account called miscellaneous suspense because we took a loss. So this is where we are actually going to take a real example of the historical cost theory, right? Or the historical cost principle, right? Here, our asset is currently worth $4,000. Okay? However, because I sold it, I'm only getting $2,000 out of it. So what happened to the other remaining $2,000? You actually are going to take it as a loss because you short sold it or you sold it for under its amount. However, let's look at this journal carefully. I didn't journalize it as $2,000 for my furniture. I journalized it at my historical value, what I originally purchased it for, which was for the total of $4,000. So here, not only am I recognizing a loss, which you can because of the idea of revenue recognition, right? It also applies to losses as well. Okay? So revenue recognition here is that I am recognizing a loss because of a transaction. And look at this. It is also matching principle because 2,000 plus 2,000 gives me a total of makes up my total of the $4,000. Okay? So right here, we got to take a look at 3 different principles. We got to take a look at the historical cost, right? We sold our furniture. Right now, the furniture is outstanding as $4,000. We sold it for $2,000, so therefore we have to recognize the loss, not recognize the revenue, recognize the loss of $2,000. Now in this case, I'm going to place it into an account called miscellaneous suspense because right now it's in the air. I don't have an account for it just yet. Okay? So I'm going to place it in a placeholder for now as miscellaneous suspense, which literally means random stuff, right? It's in the air somewhere. It's a random stuff, right? So let's go ahead and journalize this. So let's go ahead. So on June 4th, we received cash, right? Do we have a cash account? Do we have an actual cash account?
No.
No. So our assumption here is because we are at the end of the day, our assumption is we're actually going to deposit it directly into our bank. Okay? So, of course, this shouldn't actually happen, but the assumption here is that we're at the end of the day, so right after we made this sale, we're just going to dump the money right into our checking account. Save us an extra journal transaction right there, okay? So in this case, it's going to go directly to our bank account. So my checking account is what number?
10100.
Okay, so good. Checking for 10,100. Okay? And it's because I sold it for $2,000. So therefore, I increased my account by $2,000. All right? Then I have a miscellaneous suspense. Now, a miscellaneous suspense, let's go ahead and take a look. Where is that located? Okay. I'll give you a hint. It's going to be an asset.
So is that like a contra account?
Miscellaneous expense is not a contra account. It's just a random account that we decided to just place anywhere. What we're going to actually use this miscellaneous expense for is when we make purchases of our fixed asset. So in this case, it is technically an other asset because it's going to be a temporary placeholder to hold money. So in this case, it will be considered an intangible asset. But in this case, it's not a contra account. It's not decreasing anything. You're not decreasing the value of your assets. You're actually just getting rid of them, right? So in this case, we will recognize the loss, but right now I don't have a place. I have to create that account because I requested the accountant to create an account for that loss, right? So right now I don't have a place for it, so I'm just gonna place it in a random account, and it's called miscellaneous expense. Okay, so the miscellaneous expense, again, it's whatever the accountant can approve, right? In this case, it's a random account. There's no meaning to the miscellaneous expense, right? So in this case, what's my account number for the miscellaneous expense?
1990.
19,990. So again, I'm going to type it in here. Miscellaneous expense, MISCE, miscellaneous expense. Okay? And it's for 19,990. All right? And how much is this loss for?
2000.
It's for the $2,000, correct. And then lastly, we sold our furniture. We're getting rid of our furniture. So this is why we have to decrease it, because we're not going to increase it. And it's going to make a lot more sense when we dive into our ledger, because we're getting rid of our assets, therefore we're going to credit it. Okay? So let's go ahead and credit my account for the furniture. Okay? And what is my furniture account? Do you remember? You can always look up. You don't have to look into the chart of accounts. You can always look up for references as well.
13,000.
13,000. So again, before I can say that my journal is complete, what do I have to make sure? I have to make sure that my debits match my credits, in which in this case, it should equal $4,000. Okay? And then in the note in the description, I can say that I just sold the furniture and I took a loss. So sold furniture, okay, comma, or actually no, I like that. I like what I wrote earlier. Loss on sale of furniture. Okay. As long as you have the parentheses, you can enter in whatever amount. You can type in the actual amount that you took a loss on the furniture if you'd like. It's up to you. Okay. All right. So now that I finished journalizing this, right, I completed it. I got my accounts on there. I have my description. My debits match my credits. So now I can go ahead and proceed to my general ledger. All right. So in this case, it's an asset, right? The first thing I'm going to look at here is checking. Now, rule of thumb here is the best way to go about entering your information into your ledger is to just be in line with your journal, okay? There may be a time when we journalize something, and let's say we journalize a liability first, and then we journalize an asset second, right? Let's say we paid for something, right? And of course, when you go to your ledger, the first thing you see is your checking account, okay? Yes, you can technically do that if you're really good at this, or, remember where you leave off of things. But we're going to be taking a look at journal entries where we're going to be listing out maybe 6 items or so. All right. And if you jump around, the problem is you might forget it. And then when you forget it, then your balance, your debit balance and your credit balance will not match at the end of your trial balance. So the best way to do that, if you are a beginner, just follow exactly how you journalized it. So if my first thing's checking, you go to your you go to checking first. Okay. So again here, June 4th, and then I'm going to go ahead and write cash sale on furniture, right? Because that's what I received. I received cash for it. All right. We are still on the first page of the general journal, and this time I'm increasing my account by $2,000. So here is the formula. I need you guys to watch carefully, okay? This is how you determine the normal balance and have it calculate for you automatically. So this is the formula. This only applies to the debit side, okay? I'll show you how to do the credit side when we come across it, okay? So in this case, it's going to be the one above it, so your previous balance, okay? You're going to add any debits, okay? And you're going to subtract any of your credits. So in this case, right, if we're talking about visually, right, it's going to be up 1 plus left 2 minus left 1. All right? Or in this case, if you're looking at cell numbers or cell references, it's going to be F15 plus D16 minus E16. All right? So again, you're going to take your previous balance, you're going to add any debits that you've increased your account, and you're going to subtract any credits that decrease your account. And then press enter. So here I get $23,000. Now, of course, if you know how to do this, go ahead and click that formula and drag it all the way down to the very bottom of that worksheet. Okay, and notice this, it fills everything in with the 23,625. Now let me show you this, okay? This is just, so the next time you enter something in, right? Let's say I paid rent for $1,500. It's going to automatically calculate it. Let's say I deposited another $2,000 or $200. It will automatically calculate that for me. Okay, so that's the one thing that is very useful about the Excel, is that it will produce the information for you a lot quicker. All right, instead of going out and punching it on the calculator, it will have the information for you. Now, needless to say this, okay, since we are going to be using the Excel file over and over and over, there are possibilities that when you save the file that sometimes it will not update the formula just because there's so much information, right? We're looking at 6 different categories of accounts, and each one has has maybe 20 accounts or less. Okay, so imagine punching this formula in 20 times 6. So that's a lot of accounts, and that's a lot of information that Excel can handle. So you may sometimes it may get stuck on there, so you may have to re-enter the formula again to initiate the formula again. But that's only some cases, okay? So in this case, I already deleted my little entries that are added here already because those aren't pertaining in my calculations. But however, I just wanted to demonstrate you why this formula works. So if you spend your cash, it will update it. If you add your cash, it will update it, okay? And we're going to apply this similar formula to every single account on this worksheet, okay? So then it makes it much easier for us to be able to recognize our account balance. So right here, right off the bat, by me calculating it, I know I have $23,000, okay? So now the next one is going to be furniture. So furniture, let's see, I believe furniture is right here. Okay, so again, 6-4, but this time in my description, I'm going to say I sold my furniture. Sold furniture and I'm going to say for a loss. Okay? All right, and then again, general journal number 1. All right, if Excel starts to automatically pick up, yes, you can use the autofill. Okay, but once we move on to page 2, make sure that you don't autofill and keep selecting general journal 1. Remember that, okay, because it will start changing after that. Okay, here we are. Did we debit our account or did we credit our account? Oh, we're supposed to credit our account. What did I put? Yes. Okay, in this case, I'm supposed to go to miscellaneous expense first. So there you go. I already forgot how to do miscellaneous expense. And if I were to continue, I would have forgotten it completely. So now I'm going to take a second from here, go away from this page real quick, and I'm going to go ahead and go down to miscellaneous expense first. Okay? So let's go ahead and go down to miscellaneous expense. Okay? So it's going to be the very last account table on here. And now I'm going to go ahead and enter in the date. And I'm going to go ahead and say loss on sale of furniture. Okay. Post reference, again, general journal number 1. Did I debit my account or did I credit my account?
You debit.
Yes, I debited the account. So I debited the account by $2,000. So therefore, because this is my first entry here, that means $2,000 is what's going to be under my debit balance. Okay, because it's the first entry so far. I don't have anything under it, so I don't need to put the formula in just yet. Okay, until I reach the second one. Okay. So then now I'm going to take a look, and now I can go back to my furniture. So I'm going to scroll all the way up. So yes, this is tedious, but then again, especially for beginning of accountants, if you end up skipping and going all the way around, you will end up making minor accounting mistakes, and you will forget. Okay. So I'm trying to locate. Here's my furniture. So again, I started filling it halfway until I realized I skipped that miscellaneous account. So here, I'm recognizing here. Did I debit my account or did I credit my account?
Credit.
You credit it, yes, right? Because I sold my items. So this is where the theory of the accounting model comes into play. I increased my account originally by purchasing it, right? If I'm going to get rid of it, I'm decreasing my asset. And in order to get rid of my asset, right, instead of saying I'm going to do a negative debit, right? This case, a negative debit is also in correlation to a credit, all right? So think of your debits and your credits as on a balance scale, right? 0 is right in the middle. If you go left, then that's a debit, right? If you go right, it's a credit. Same thing here. If I went left 4,000 steps and I need to get to 0 because I sold it, how many steps to the right do I need to take? I need to take an equal $4,000 steps to the right to get to 0. Okay, so that's how this makes sense for the balance sheet or the accounting model. I sold the furniture. I don't have it anymore. And in order to get rid of it, I got rid of the entire thing. So I'm trying to get back to 0. So if I'm in my debit right now, and if I apply my formula, right? Up 1 plus any credit, or sorry, up 1 plus any debit, subtract any credit, my balance is now 0. Okay? So again, debits and credits work like a balance scale, right? If you go left too much, then it's going to tip over to the left. If you go right too much, you're going to tip over to the right. But let's say you already have it to the left and you're moving everything to the right, then the balance scale starts to become 0. Okay? All right, there you go. So now we finished our second transaction, right? Any questions so far? And we posted to the ledger. It's a lot of information, I know. Okay. All right. So then let's go ahead and do this last one, and we'll take a break after this, okay? So scenario on June 5th. So we started a new date. Okay? Oh, I hit the wrong one again. Exit out of that. So here, we're on a new date. It says that here we have to pay rent to landlord properties. Okay? When you pay rent, usually what happens is you have to make a deposit, and sometimes you may have to pay a few months in advance. Okay? That's just in case something happens and you can't make rent, right? They kind of force you to make at least the first month's rent, or in this case, they want us to pay 4 months' rent in advance. Okay? But we also have to consider when we are paying for the rent, we're also paying for the current one, the current month's rent, right? Because we need to use the area. We need to make modifications. So in this case, I'm actually I have to make a rent deposit. I've also have to make pretty much a prepaid rent in advance, and I also have to pay the current period's rent expense. So in this case, I have 3 things I need to think about. Okay? So in this case, it tells me that my rent deposit is $1,500. All right? And I'm buying a total of 4 months rent. So that gives me a grand total of $6,000. Okay? But because I am paying for also one of those months out of the 4 is going to be a current expense, I'm only going to recognize 3 of them as a prepaid expense or prepaid rent. So by breaking down the calculations, right? No matter what, I'm paying 4 months of rent plus my deposit of $1,500 to get me a grand total of $7,500. Right? But if I break it down in my journal, okay, first thing I'm going to recognize is 1 month's rent because it's the current period. I'm going to recognize 3 months of advanced prepaid rent. And then I have my rent deposit. Okay? Giving me a grand total of $7,500. And guess what? I wrote my very first check. So there's a lot of things that are going to go into this. We are dealing with a vendor for the first time. We're writing our first check. So let's go ahead and journalize this and see what your necessary measurements that you have to do. Okay? So first things first is our journal, right? We're going to write the date in. What are my accounts that I need to recognize? I need to recognize this first month's rent, right? The month of June. Rent expense. Okay? Now let's go ahead and double check my chart of accounts. Where is rent expense? What is the account number for rent expense?
62,000.
62,000. Good. All right. Rent expense is for 62,000. And for how much is it? So I just took $6,000 and I divided by the 4 months, which gives me a total of 1,500. So in this case, that means every month I pay for rent, right? It's going to be for $1,500. Okay? How much was my prepaid rent?
45.
Yes, because we're paying 3 months in advance. So in this case, what account do I have that has prepaid in it? What is prepaid rent? Do you remember this? What is prepaid?
Asset.
It's an asset. What kind of asset? Not operations, it's other. Remember? Because it's an intangible asset. Can you physically touch rent?
No.
No. And because we've made a payment in advance, that makes us own that location for those months. Okay? So this is an intangible asset. So in this case, what is this particular account called? Yeah, 18600 for prepaid accounts. Okay, so here you go. I'm going to type in prepaid accounts for 18600, and it's for the amount of 4500. Right? Last but not least, I have a rent deposit. Okay? If I have a rent deposit, what account number is that?
Is it 18700?
18700. Good. It's right underneath prepaid accounts. So a rent deposit, right? Can you actually physically touch a deposit?
No.
No, you can't. You can't touch any deposit, right? Because it's intangible. So that's why it's an other asset. So in this case, this was 18700. And there we go. Sorry about that. Okay, so here we're on our journal, right? We're looking at rent and it's deposited, right? Or a rent deposit for the total of 1500. Okay? Now we wrote a check for the very first time. So where is this check coming out from?
From the checking?
Yes, yes, yes. All checks come right directly from our bank, which is our checking account. So, and our checking was 10100, okay? And for what grand total is going to be my checking account? How much am I writing this check out for?
7500.
7500. So again, you can do simple math here, add them all up, and ensure that your debits match your credit. So in this case, 7500 is correct. All right. Now, I gave you this information down below. Usually, yes, that's what you would do. But first things first is before we enter in that information, right? I'm going to have you go ahead and fill out your check register first so you can identify which check number you used. So in this case, on the same exact workbook, right? Right next to it is your check register. Click on that. All right, and here you have all of your check numbers written in chronological order. Okay, in this case, what was the date that I wrote this check on?
The 5th.
We bought it on the 5th, or we wrote it on the 5th. For how much did we write it for?
7500.
7500. So this may be some, I think I gotta format this to comma style. Okay, and who did I write this out to?
Landlord's properties.
Yes, we wrote this out to landlord's property. Okay, landlord's property. Properties. Oops, sorry. Properties. Okay. Boom. Now that I wrote my check, I've updated my check register. I know for a fact that I wrote check number 1501. All right. And this is going to be very, very useful. Okay. Because not only does it keep track of your checking, it also keeps track of your transaction as well. So in this case, rule of thumb is when you're putting in a description, you definitely want to make sure that you enter in information that is very, very, very important, such as who did you write the check out to? What vendor are you dealing with? So in this case, landlord's properties is my person, my vendor. Properties is the person I am making a what do you call it? It's the vendor I'm dealing with. Okay, and I wrote check number 1501. Okay, that should be good enough information. But once we move into purchasing like inventory or something, that's where you could be a little more specific. Okay, so here I've entered in my information. So first things first is let's go ahead and update my ledger. Okay? So this is a perfect example, right? Checking should be the first thing that you should see on your ledger. But in this case, it's the last thing I'm dealing with. So I'm going to make sure I go through my journal exactly how I've written it. So first things first is going to be rent expense. So going out to my ledger now. Rent expense. So where can I find my rent expense?
Expenses.
So again, these are in alphabetical order. So in L. This is payroll, PQR. Travel. There you go. I found it. All right. So 6 for rent expense, right? I'm going to say this is June's rent expense, right? Or rent expense for the month of June. Rent for June. All right.
The date was the 5th.
Say that again?
The date was the 5th.
Oh, the date was the 5th. I'm sorry. Thank you. The date was the 5th, okay? We got rent expense, okay? Post reference. What journal am I still on? I'm still on the first one. So, general journal number 1, okay? And I debited my account for $1,500. All right. Therefore, this is the first transaction in my list here. So, therefore, it is a debit balance. So, again, all expenses, with the exception of purchase expense, are more likely to be debited. Okay. All right. What's next? Prepaid accounts. Okay. So, prepaid accounts, as I've mentioned before, is an intangible asset, which in this case it's going to be down below because we organized it based on its category itself, right? All your current assets are at the top, your fixed assets are in the middle, and your other assets are in the bottom. Okay, so here we are going to prepaid accounts. So here's goodwill, deposits, prepaid accounts. Okay, prepaid accounts. So 6.5, right? This is prepaid rent. So rent, or I'm going to write advanced rent for 3 months. Okay, it's going to be down at the very bottom, in between accumulated depreciation truck and deposits. It's down all the way at the bottom. Okay. Did you find it? It's above goodwill. Okay. Post reference again is going to be, we're still on the first page, general journal number 1, and it's going to be debit for the $4,500. So if you want to be specific, you could say, it's $1,500 per month, and you purchase a total of 3 months in advance. But here I just put advanced rent for 3 months. Okay, for $4,500. All right, I'm gonna go ahead and format this. Okay. Then once we finished my accounts, prepaid accounts, I'm going to go ahead and drop right down below, because right below is my rent deposit. Same thing I'm going to write here, rent deposit. Pretty straightforward. Post reference is general journal number 1. And my debit is going to be for $1,500. Alright? Just like how I see it in my journal, it's just how I am going to record it in my ledger. Okay? So there we are. We have a debit balance, and we have a debit balance of $1,500. Alright? Last but not least, I have my checking account. We all know where the checking account is. It's all the way at the top. So I'm going to scroll all the way to the top. Here I am. Since I have a formula in here already, let's go ahead and see what happens when I enter in this information. So again, it's up to you what you want to place here. A check number is sufficient enough. I'm going to go ahead and just put check number 1501, okay? You don't need to put the person's name, or you don't need to put any other information, because the check number should pretty much guide you, right? If I were to put in my check number here, right, I could just go to the check register. I could go to the check register, and I'd be able to find who I wrote the check out to. But also, my secondary information here is if I can take a look at where I placed this piece of information, right? If I placed it in my general journal number 1, I just locate where I wrote the check number 1501, and I can tell right here, boom, I wrote it to Landlord Properties. Okay? So, it really depends on what the information is, but everything seems to be tied into, they're all tied together. So there are a few things that you can do, and a few things that you, whatever information makes you feel better. So if you want to put Landlord Properties, you may do so, okay? I think the check number is just good enough, okay? Now notice this. Did I debit or did I credit my account?
Credit.
I credit my account because I spent money, right? I'm decreasing my money. So again, if I'm at 23,625 and I spent $7,000 of it, how much should I have remaining? So if I type in my 500, right, in my credit side, it's going to decrease my value down to 16,125, right? So did you see that, everybody? By me just entering in a piece of information, it automatically recalculated my debit balance. So that means now I should have $16,000 in my bank account instead of having my previous balance. So the great thing about knowing this is that when you look through your transaction, you can see the difference and the changes of your money, right? You started out with 21, then you had 23, now you're down to 16. Just like what you see on a bank statement, right? This is exactly more or less the same thing as a bank statement. You're adding a transaction and you're finding out what the account balance is at the end of each day. So in this case, boom, I only have $16,000 left. All right. Now we are completed with the general ledger. Now I'm going to introduce you to the subsidiary ledger. Okay? So we dealt with landlord properties. Who is landlord properties to us? What are they?
They're a landlord.
They are landlord, but specifically, are they a customer, vendor, or employee? Do they work for us?
No.
They are a vendor. Yes, they're providing a service to us. So here, this is where I'm going to introduce you to the subsidiary ledger. So again, I mentioned this yesterday. Subsidiary ledger is going to be consisting of everybody that you know in the business. So it's going to be including your customers, your vendors, and your employees. In this case, this is our very first vendor. All right? Very first vendor. So I'm going to go ahead and click on my vendors tab. All right? And this is, all the vendors are going to be in alphabetical order as well. So usually your customers list or vendors list should be in alphabetical order. If not, it's in some kind of order. So in this case, it's in alphabetical order. So here it is, landlord's properties. Okay? And this is how I'm going to fill it out. So when we dealt with landlord properties, right? We dealt with them on the 5th. Now your notes could be whatever that you've purchased to them. So in this case, I'm going to make sure that I say that I purchased 4 months rent. Okay? Rent. And I made a deposit. Okay, so 4 months. Let me do this again. So 4 months rent, right? 4 months rent, which cost me a total of $6,000 plus my deposit. Okay, I cannot type today. Deposit for $1,500. And another piece of information that you can do here is that I'm going to also indicate that I paid with a check. Okay, check number 1501. All right. Now in this case, rent, usually there is no invoice, right? Usually you're not getting billed every month. In this case you are. But in this case, we went to the landlord, right? We already paid our first months. Usually, it's in your first month is going to be written in a contract. It's not technically a bill. It's going to be a contract. So then the next time you get your bill, that's where you'll type in your invoice number. In this case, I didn't receive a bill. Okay? So I can ignore that. All right? The next section here says post reference. Same thing as your ledger. You're going to refer where this transaction happened. And in this case, it happened on the general journal, page number 1. Okay? Now, do you have a due date? When you're dealing with rent, of course, because we don't have our first invoice, then no, we don't have a due date. Okay, but if you want to break it down to your rent expense, making it every single month, then you may do so. In this case, I didn't receive a bill, right? It was just a contract. So in this case, my due date doesn't have one, because I already made the payment in advance. I don't even need to pay this person until my four months is over. Okay, so in this case, I don't have a due date. All right. I didn't make any advance payments, okay, or prepaid amounts, all right? Now, don't confuse with prepaid rent and a prepaid amount here, because I didn't make an advance payment for this service. This service I paid in one shot. They billed me, or they charged me a total of $7,500, right? And I listed the amounts here, right? I paid 4 months in advance of rent for $6,000, and I also made a deposit for $1,500. So therefore, the bill that they charged me from landlord properties was in fact for the $7,500. All right. Of course, I didn't get any returns and allowances. That's going to be very difficult, especially with the landlord. Discounts, obviously not. And did I make a payment? Yes, I did. I made a payment for $7,500. Okay? Now, this will make a lot more sense as we gradually continue to use this. But for this particular scenario, right? My bill was what I saw it was. It was a total for $7,500. I didn't make any prepaid amounts. I didn't pay somebody in advance and now I'm paying the rest. Okay? This is something that my bill was a total for $7,500 and I wrote a check for $7,500. Right here, I identified that I made a payment to Landlord Properties using check number 1501 for the full amount of the $7,500. Okay? So how this works is I don't owe Landlord Properties anything. In fact, they owe me service, right? Okay? So in this case, what I'm going to do here is this is how you do the formula for this particular uh, okay, I hit the wrong one. This is a formula for this particular transaction here. Okay, and it will make more sense when we move into purchasing of our assets. Okay, but for now, just follow along and it will make more sense when we move on to another scenario. So what I'm going to do is I'm going to start off with my formula, right? The first thing I'm going to say is I need to have my invoice amount. That's going to be my starting point, is how much do I owe, okay? And everything else I'm going to subtract against it. So if I made a paid advancement or advance payment, right? Of course that's going to lower how much I owe, right? Same thing if I had a return and allowance. It's going to decrease what I owe. If I get a discount, that's also going to decrease what I owe. And lastly, if I made a payment, of course, that's also going to decrease what I owe. So your first standing point is going to be your total invoice amount. And you're going to subtract any prepaid amounts, subtract any returns, subtract any discounts, and subtract any payments. So in this case, if I press enter, right, my amount is 0. I don't owe Landlord Properties anything. They gave me a bill. I paid it in full with a check right then and there. So therefore, this isn't really technically an accounts payable, but it's definitely something that you want to look into because just in case you need, for any reason, you need your rent deposit back, or you need, let's say you packed up and left and you want your money back for some reason, right? You don't like how this landlord's treating you and you want to fight them in court, then that's what's so important about using the subsidiary ledger. You have all the information, you have a valid transaction that it has happened, right? And you have proof that you made a payment, all right? And here you have proof that you don't owe Landlord Properties anything. Okay? So far so good. Any questions? Okay? So again, this is very important on how to use this because it also allows us to keep track of our vendors as well as our customers. We can go ahead and take a quick scan, right, at all of our customers and see what their account balances are. We can also take a quick account balance of how many people we owe. So that's what's great about this. And then including, of course, your employees, right? How much do you owe them to pay for their paycheck, right? So same thing and going on forth. So this is how you deal with the subsidiary ledger. All right, so far so good. Any questions? Okay. So again, a lot of information that I'm talking about today. So again, we'll gradually keep going and practicing. We have the next 4 weeks to keep practicing this over and over and over until we understand how to analyze a transaction, journalize it, post it to the ledger, and so on and so forth. Okay? All right. So right now it is 10:22. Go ahead and take a nice 20-minute break. So please be back by 10:45. Okay?